Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 12th of November. Right, let's just have a look what's going on in the market and see if we can't work out where the next trade's coming from. So, a bunch of UK data coming out. If you have a look over here at trading economics, you get the full picture here. You've got the actual number with the consensus. Most of the numbers weaker than the forecast. So that just gives that sterling a bit of a softer side. I was saying this yesterday, when we have clear dollar direction like we have after the US CPI numbers, ideally you want the next round of data to go with it, right? Makes it easier on the downside. Aussie employment numbers also not hitting the mark. So sterling and Aussie just drifting lower, euro under pressure as well, right? Dollar CAD is, it was due a correction. I thought it would come when oil sort of dropped back below $80, but that's it's shot off as well. And obviously dollar Swiss and dollar yen moving topside, and just cruising to the top side is the dollar index. So basically the dollar move is still in play, right? I think everyone's trying to work out, like no one expected the US inflation numbers to be so strong and what that means for the dollar and everything else. So it's a bit of a tricky one because everyone would sort of factored in the chance for the dollar to have a bit of a breather, drift lower, but now it's raging hot again. And it's got to the point where we are now starting to think this is a bigger move than just what we're looking at right now. So just having a look here at the moment on the longer term charts, I mean, you can see the that counter rally a couple of weeks ago on when the dollar was just drifting lower, like a massive sort of dollar squeeze, right? Euro never broke back above the trend line, and it's still now cruising to the downside. If anything, euro looks like it's going to 110, right? And sterling, for that matter, I've been calling it for ages. Once again, you got to get all these pieces to sort of fit together. And there's been a number of false starts. You can see how it's been down here before and straight back up to 138. I think this time we've got strong US numbers and weak UK numbers. So this makes the move a little bit more real, a little bit more medium to longer term. The Aussie coming up to a support trend line. Chance to potentially get into a trade here. Now, it's massively overdone at the moment. You'd love to see some sort of retracement to get into the trade at a better level. But you know what? We may not get better levels. And that's where those University of Michigan sentiment numbers today come in that North American session. Kiwi, I'll tell you what, it's been battling. I mean, there's a 0.5 percentage point interest rate hike from the RBNZ factored in here, and it's on its knees. This is going to be a crush to that long market. If it goes down through that bottom trend line, it's in all sorts of trouble, and you should see a pretty decent clean out. The dollar pairs at the top here, I'm not exactly comfortable with dollar yen and dollar Swiss. Like the dollar move has been sort of here and there. You can see it better on the hourly charts. And dollar CAD, I mean, this convoluted price action, to me, the key is oil, right? If oil gets back into the 60s, well, then dollar CAD's at 135. Outside of that, it's just going to sort of whip around like it usually does. The dollar index looks like a pretty good bet to be going up continuously from this point. Right, so that's where the markets are. Now, the key to obviously putting this all together is coming back to your main fundamentals, right? If I just change screens here, we'll come back to what's coming out. So you're looking at, where's the next bit of juice as such going to come from? And you got the Eurozone industrial production numbers. Now, this is a pretty easy situation. We've now got very clear dollar direction. The Euro's on its knees. These numbers come in weak, right? We are looking, just selling euro and just seeing how it rolls lower. And then you got those University of Michigan sentiment numbers, the last number before the close of the week. You know what? This is the dollar needs something to take the edge off. So you're looking for weaker numbers, but tell you what, everything's coming in pretty hot in the US. So I'd keep a very close eye on that. So just if you're having a look for the real numbers, obviously Metastock still being a bunch of weirdos, not giving us the numbers. So having a look here through the various bits and pieces, the industrial production numbers here, the consensus, these are the ones you want to be focusing on, 4.1% year on year, minus 0.5 month on month, and 72.4 for the University of Michigan sentiment numbers, right? So once again, go with the flow, go with the direction, right? If anything, right? So you're looking for, let me just finish that bit. If you're looking for weak euro numbers and strong US numbers. That's the general picture. But this is how, when you do know what's going on, how things can work out. If we get some strong industrial production numbers here, that'll send euro up a little bit, probably to give us a better level to sell, right? This is not a number that changed the trend. If anything, we could get a little bit of a move up, and then you're looking to sell any rallies at this point. Obviously, the University of Michigan numbers, if they're really weak, yeah, you get some slight drift back on the dollar. But once again, it's not going to change what's going on. These CPI numbers really put the Fed on high alert. So, and also as you come into the weekend, right, you usually see some profit taking. These currencies have come a fair way. So if there's no sort of significant variance in the data that's released, the euro numbers, Eurozone numbers, or the US numbers, then you might sort of see this thing, euro back towards 114.80, and sterling back up to 134. Back to yesterday's closes is sort of where you can see those grey lines. That's what we might see, okay, across the board. And that's pretty much it. These are nice markets, right? They're not jittery. They're not crazy. There's no weird volatility, no massive liquidity crunch situations. So it's all looking pretty good. Equity markets have calmed down, which is good. Where they go from here, you'd think higher interest rates. If we get, I think next week we might start to hear some things out of the Fed about the possibility of moving sooner. Obviously, one big CPI number is not a big deal, but you know what? This is about the fourth one in a row. They have probably got one more chance to see one more number before they actually have to do something very dramatic, right? And I bet you they're biting their fingernails at the moment, because you know what? This could derail the US economy comeback. There's so much money in the economy at the moment, so much stimulus. They need to start pulling that out pretty quick. But as we found during the global financial crisis, 07 to 09, when they started trying to do that around 12, 13, it actually sort of started to cripple some sectors of the US economy. So it's going to be a hell of a play on the way out. We're going to see all the central banks deal with the same thing. And that means lots of trading opportunities for us. All right, guys, have a good one. Have a good weekend, and all the very best. Cheerio.